Are you curious about what goes into your credit score and how you can improve it? This video is for you. Hello guys, welcome back to my YouTube channel. My name is Oluwafemi Oni, and today I'll be talking about what credit score is, how to know your credit score, how to improve your credit score, and what you should avoid to prevent your credit score from going down. So what is a credit score? A credit score is a number that tells lenders how risky it is for them to give you their money, and basically it ranges from 0 to 999, 0 being the lowest and of course 999 being the highest. And what it does is, if it's very high, that means you're trustworthy. Lenders can give you money and they can approve your loan application or whichever credits you're applying for. And if it's low, that means you won't be eligible. So how do you know your credit score? There are a number of platforms you can create an account with, and they'll be able to calculate your score for you. There are a number of them, for example, Experian, Equifax, ClearScore. Basically what they do is they check your history, ask for your address, where you lived in the past 3 years or thereabouts, date of birth. If you have any debts, they will check if you have any credit card, how you use your debit card, how you do your transactions. They will check all these things and come up with your credit score. And then they give you a rating, which is between poor and excellent. Poor, of course, being worse, and excellent being the highest possible rating you can have. So how do you build your credit score? There are a number of ways which you can build your credit score, one of which is getting a credit card. So what getting a credit card does is it gives you the opportunity to spend the money that you don't have, and at the end of the month you have the responsibility to pay back what you've spent. And when you want to get a credit card, there are a number of things you take into consideration. Are you going to be disciplined? Some people tend to think that when you have a credit card, you can just spend the money, because sometimes they give you a lot of money. Sometimes they can give you up to 10,000, some 6,000, 5,000, depending on your eligibility anyway. So are you going to be disciplined to pay back what you've spent at the end of the month? Also, you need to know, or you need to check if you have the stable source of income to pay back whatever you spend at the end of the month. For example, some companies might give you like a limit of £10,000, and if your income is like £2,000 and you go ahead to spend like 5,000, for example, do you have the means to pay back that 5,000 at the end of the month? So all these things you need to take into consideration, because now what they do is they set up a payment plan for you, like direct debit, which at the end of the month you pay back the amount of money you spent on your credit card. And although some companies tend to allow you to pay in instrumental, you can pay, for example, if you spend that 5,000, you can maybe spread it over 32 months, 36 months. However, for the sake of this video, it is for credit building. If you're looking at building your credit score, you need to pay back everything that you spend at the end of the month, so that they know that you're good with your finances, you're able to manage your money very well, and all these things add up to a very good credit score. Also, you need to keep paying on time. So as I said, the company is going to set up direct debit for you, and when it is time for you to pay, you need to be sure that you have the exact amount of money which you've used, which you've spent. For example, if you spend £200 when it's the end of the month, or the time that you and your company set to remove the money, you need to ensure that you have £200 which the company is going to remove. So another way to ensure that you're building your credit score is keeping your credit use low. Some people may take a credit card today and then they just go to the market and max out the credit card. That is a very wrong approach. So it is said that you need to ensure that you don't go up to 70% of your usage. For example, if your limit is £1,000, you should not spend up to £700. You should ensure that you spend very low amount of money from your credit card. So when you don't go over 70%, they understand, or they believe that you can manage your finances, which is good for you. Another way which you can build your credit score is setting up standing orders. in my own case, what I did was I opened a savings account and I set up standing order from my current account to a savings account. At that point, I did £200 every month, just that was going to my savings account every month. And so what this does is that it gives an impression that you are able to manage your finances, you are able to save for a rainy day, you're able to think of the future and manage your finances. So some people might be curious about, how do you set up the standing order? It's very simple. What you do is you go to your mobile banking app and you find a section that says set up standing order. And what you do is you just put a particular amount of money which is convenient for you, and you put a particular date when you want the money to be removed every month. So that's it. Another good way to build your credit score is to register and be on the Electoral Road. Simple. If you are on the Electoral Road, you are eligible to vote. And what this does as it relates to credit is that it ensures, or it allows people to find your address and to be sure that you have a specific or a particular place where you live, and that makes you more credible. Also, you can utilize direct debits to build your credit score. How do I mean? Some people might go to get SIM, can buy phones or any gadgets from these tech stores, and what you do is you set up a contract with them. For phones, you can say you can get a phone of maybe £300 and say, okay, can I pay it over 12 months? And what they do is they set up a direct debit, which they remove some particular amount of money every month. Personally, I think if you're doing that, you should ensure that you do the ones that are with zero interest, because you don't want to pay interest really. I'd rather buy it without interest than pay some particular amount of interest over time. So a very good option is to do a SIM contract. That was what I did when I came into the UK. I did a SIM contract, which was of course zero interest, but what they do is they give you data which you pay every month. They set up a direct debit for you to pay for that data every month, which at over time it builds your credits basically. Unlike, if you need it for, you can get it, but if it's zero interest, why not? And that's it. Another way to build credit is to keep on paying your rent or your mortgage. So as I talked about direct debits earlier, some landlords tend to set up direct debits for their tenants, and what it does is it makes you responsible, gives you that opportunity to be disciplined, to ensure that you pay back or you pay your rent every month. In my own case, is when I was still a tenant, I paid using standing order, and which I was able to set up myself, but it was over a particular of time, over a fixed period of time. So depending on the method which is convenient or comfortable for you, or whichever way the landlord wants it, that is how it should be. But basically it's about using direct debit or standing order to pay your rent or your mortgage. I'll just talk about the difference between standing order and direct debits briefly. So direct debits, you are not in control directly. Briefly, I'll talk about the difference between direct debits and standing order. So standing order is what you set up yourself. You can cancel anytime, you set the amount yourself, you set the date yourself, and you're in charge of it. While direct debit is, you are in charge but not directly, because the company which you're having the contract with are in charge of the direct debit, in the sense that they might tell you what dates you're going to pay the amount of money. They tend to remove the money themselves. If you cancel, you need to let them know that you've cancelled. So unlike standing order, which you can cancel anytime you want, direct debit is not like that. You are accountable to whichever company sets the direct debit. So as I talked about what can improve your credit score, now I'm going to talk about things that can affect your credit score. The first thing I'm going to talk about is applying for credit card multiple times. So if you have one credit card, if you're just starting or if you're building the credit score, I think one credit card should be able to build your credit score for you. In my own case, I had one credit card, and I was able to use it to have the maximum number you can have as a credit score. So what lenders tend to look for is your ability to utilize that credit wisely. And when you go ahead to apply for another credit card in the space of 6 months, what it does is it gives an impression that maybe you're not very good with money, or you're just looking for ways to have free money. So you want to avoid that. So when you apply for a credit card and you are approved or you are denied, what lenders do is they go to do a hard search on your record. So the hard search stays on your account for a period of 6 months. So either you're approved or you're denied, it stays on your account. And what you don't want to do is apply multiple times in a way that it gives the impression that you're just desperate, and you want to ensure that that hard search goes off your record before you apply for another credit card. Another thing that can affect your credit score is having multiple unsecured loans. So what are unsecured loans? Unsecured loans are money that you borrow that are not tied to a particular asset. For example, if you finance your car, that's an unsecured loan, because they are giving you that money maybe based on your credit, based on your credit score, or based on the fact that they trust you that you're going to pay back the amount of money. So if you default, there are no ways, or you don't have any assets to maybe that they can take to replace those kind of loans. So you want to ensure that you don't get, you stick to maybe 1 or 2 unsecured loans. You don't give that impression that you are living on loans, or you need loans to manage your finances, or to be able to stay on top of your financial goals. Also, another factor that can affect your credit score is you not paying back your debt. So if you take a loan, for example, and you don't pay back, if the company takes legal action, it goes to your records, and you can stay on your records for months, which is going to affect your credit score. Definitely, no lender would want to give you any money, because of the fact that the ones that gave you money refuse to pay back. As simple as that. Another thing that you should avoid is withdrawing cash with your credit card. That is going to affect your credit score massively. So it gives an impression that you are not managing your money properly, because they know, or that you're meant to use your debit card to withdraw cash, and of course credit card for any other transaction. So they're giving you the money which you don't have technically, so that you can pay for your online transactions. But if you go ahead to withdraw cash with it, it's going to affect your credit score. So I'm just going to share a little bit about myself as regards to building credit score, what I did. So when I came into the UK, I was not eligible for credit card immediately. So what I did was I went into a SIM store. I got a SIM, and I got it on contract, which means that they gave me a particular amount of data, and I was paying back every month. And I did that for I think a couple of months. And then I opened a savings account, which I set up a standing order. I was doing like £200 every month from my current account to savings accounts consistently. Of course, that gave an impression that I am planning. Also, I set up a standing order for my rent, and I was paying back at the right time, paying my rent, being a good boy. Also, I registered with the Electoral Road, and I of course stayed on the register. And after some months, I went to reapply for a credit card, a credit building card precisely. So I got approved. I started with a limit of I think £700 or something. So there are different types of credit card anyway, but if you're just starting, you need to apply for credit building card, which of course is going to be a low limit. They just want to see if you're able to diligently pay back the little amount of money which you're going to be spending. I might do a video later talking about the different types of credit cards that we have in the market. Presently, I have a British Airways Amex card, which a lot of people know. Basically, what it does, it gives you points which you can use, to book hotel, book your flights for travels, and it's quite good. it might build your credit score if, of course, if you are approved for it. Not everybody will be eligible. You need to have a good credit score. So I'm going to put a link below for my British Amex card, which is very good for you if you want to travel. This is not a paid advert, but because it's going to be good for you to have points which you can use to book free travels. I think everybody would like free travels. So the link will be down below. Click on it, register, and then you'll get your points. I hope you've been able to learn about credit score, how you can build your credit score, and what you should avoid to have a low credit score. If you have any comments, if you have any questions, any contrary opinion, or if you want to share your experience regarding building credit score, feel free to drop your comments below. And of course, like, share, subscribe. And if you want me to talk about any other topic, also put it down in my comment section. I'll be checking, and I'll see you in my next video.